All right. Good morning, everybody. We are going to go ahead and get started with our first To Catch a Fraudster of 2024. Here we go. So welcome. Appreciate you all joining. We've got some great guests today and a very important topic, especially to start off the year. So I just want to do a quick introduction for those of you who don't know. My name is Tyler Adams. I am the co-founder and CEO here at certifID. And we're going to be talking about a new look at wire fraud insurance in 2024. So our goal today is to really help all of you think about how you can protect your business from an insurance mindset and what that looks like, where there's certain types of questions or things that you might want to ask your carriers to really make sure that you have the coverage that you need, but also that you think you have, because I think there's a lot of scenarios where folks think they're covered for things that maybe they're not. And we've got two great experts with us today that are going to help guide that conversation. So in just a minute, I'm going to introduce those two speakers. Then we are going to go ahead and we are going to break down the type of coverage and the different types of coverage that are available through different types of policies. We're also then going to go into quite a bit of detail around the questions that you can ask before a renewal. And these are really important. They're going to really help you to make sure you've dissected these things from every angle and really thought through the different scenarios that could arise throughout the year that could be important to make sure that you are covered no matter what were to occur. And then finally, we're going to leave you, as we always like to try to leave you, with some resources that you're going to be able to tangibly go and use and leverage in your business this year. So without further ado, I'm going to introduce our two speakers today. So we've got John Biggs, VP and Director of Risk Management Education at Investors Title. So John, great to have you. Appreciate you being here today. And then we've also got Chad Gizutes. He is the Vice President of Stateside Underwriting Agency. Both of these gentlemen we've had the opportunity to work with for a while here at certifID. John has been a partner of ours for a long time, and so has Chad on the insurance side. So we're very fortunate to have them here today and for them to be able to provide their expertise with all of you. As a reminder, throughout the webinar, if you have any questions, please go ahead and submit them into the Q&A. And we will be sure to get them answered either throughout, if it's sort of timely, depending on what slides we're on, or we'll cover them at the end if we have some additional time. All right. So first up, we are going to go over some forms of insurance. We want to make sure that you understand the full landscape and the different types that are available that we'll be talking through today. So the first one is errors and omissions. The next one is cyber liability. And then finally, we'll be talking about fidelity bond and escrow security bond. So E&O, what is it and what does it cover? Chad, if you wouldn't mind taking this one.
Sure. Yes. Good morning, everybody, and thank you for being here. Happy New Year. Everybody has to buy E&O insurance in this space, and I think most know what it covers: errors and omissions. It's going to cover your business for your negligence that you might have caused or done. And if a third party holds you responsible for that negligence, that's what the E&O insurance covers. And it's considered an all-risk policy, like your homeowner's is a named perils policy. It covers you for fire, wind. This covers you for all negligence in rendering your professional services. And it does have a lot of exclusions because it's a blanket coverage for your negligence. But most people know what the E&O insurance is, and you have to have it in this space.
One thing I would point out there too is that E&O is not going to cover you for financial fraud. Most E&O carriers consider that to be an intentional fraudulent act by a third-party actor. And if it wasn't excluded already, by this time in the last 10 years or so, it's been specifically excluded to direct you to get cyber fraud coverage. And when I've had people that I've talked with that have been the victim of financial fraud, cyber fraud, wire fraud, and they would say, it was negligence. I was negligent. I didn't know what I was doing, saying things that you would never anticipate professionals in this profession to be saying about themselves because they desperately wanted coverage that just wasn't in their policy.
Yeah, it's a great call out, John. All right. What about cyber insurance? So a great segue into that. What does cyber insurance cover?
So not everybody has to carry, or title agents don't have to carry cyber insurance, but we recommend highly that they do. What do you do if a hacker locks up your system and asks for ransom? At the very least, you've got a number to call. That cyber carrier is an expert in knowing what to do. And so you've got that. And in addition, they take care of the situation. They can pay the ransom, and they bring in experts to figure out, how to, if your system is locked up, et cetera. But more recently, though, wire fraud is prevalent, as we all know, in this space. Now, a cyber carrier is not going to it's not going to cover you for the funds that you lose. But certainly, there's all these counterparties, the real estate agent, the lender, the title agent, the buyer, the seller, who are all pointing fingers at each other saying, well, it was their system that was hacked. It was their system that was hacked. The cyber carrier is going to come in and perform forensics and determine that your system was or was not hacked. In addition, you have all the state rules and regulations about notifying these individuals who their personal information might have been compromised. So cyber carrier is really important. More and more title agents are buying it, and we highly recommend the cyber.
I would say that I wouldn't do it without cyber coverage. Chad's right on point with what he said, but I would add to that if you ask your agent, am I covered for cyber fraud? The answer, in some cases will either be no or yes. But the yes isn't always the yes you were looking for. The yes could be, yes, I'm covered for cyber, because they don't really know the full extent of what they're selling. Having a good agent or agency like Chad's that can dive into the things that deal with the regulatory protection, the loss of data, which is generally referred to as cyber liability, the direct theft of funds through cyber crime, or the most prevalent form of it, which is social engineering, and then understanding the carve-outs. There's the prerequisites and the requirements for those types of coverages. If you don't have a working understanding of your cyber policy, first of all, you need to have one. Secondly, they're not all equal. It's not like getting car insurance and you're just really looking at the premium. In this case, you're looking at the coverage, because believe me, we sell insurance. We don't sell this type of insurance. We're not licensed for it. So I feel I can give a full-throated endorsement for the need for cyber coverage. And then, supplementing it, and not a substitute for it, but something like certifID, the host of this seminar, when it comes to loss of funds, you go through their prerequisite. You either get a red light or a green light, and then you got first dollar coverage, $1 coverage, and there's no deductible and that type thing. And it's coverage up to $1 million, and it's really the only place that you can get that type of coverage. And these two things have to be examined and interlocked to give you a well-rounded protection.
Maybe this is nuanced, but I feel like I learn something every time I talk to you guys. And when we think about cyber, especially, I think that this is on the minds of a lot of our, viewers, given the amount of system outages that we've seen across the industry due to some form of cyber attack in the last, call it, 3 months. When is a cyber policy triggered, or when is it considered a hack versus is there negligence in the way that a team is either keeping their system secure, or if somebody clicks on a phishing email, is that considered a hack, or is that considered negligence of the team not being educated to, protect themselves? Just curious of where those either overlap or are completely separate.
Those would be covered under a cyber policy, both those situations. But if it's a situation that the industry continues to be negligent, then you probably are going to see an exclusion down the road for that situation. But both of those situations would be covered under cyber policy.
And at the end of the day, when you use the word hack, that vernacular covers an enormous number of different breaches, compromises, and things. Because when you start talking about hacking the computer, That is considerably more difficult, although the hackers can do it, than hacking an individual, which is convincing them to click on that link for Starbucks gift certificate or whatever, or those pictures they want to see from the bachelor party, or whatever is their blind spot, because everybody's got a blind spot. It'll be different for everybody. I don't begin to pretend, that I don't have one, because I'm sure I do.
Yeah, no, and I appreciate that because I think that that's where, especially in our world, from a certified point of view, we really look at more and more people getting tricked, getting socially engineered, right? And then that leads then to funds getting sent to a fraudulent party. And so that's where it is interesting to think about, really understanding your policies to make sure that you are covered in those sorts of scenarios, or you're not, and understand why you would then need some sort of other supplemental process or procedure or technology to help keep you safe. But that's super helpful, especially in understanding, what cyber typically does cover.
And Tyler, one other thing too, the cautionary tale that I said about understanding your policy and having a good relationship with your agent or agency, that's not just a once in a lifetime thing. That is on renewal, because the underwriters continually learning more. The fraudsters are getting more advanced, more educated on our protections around it, and they are these things keep evolving. And just because it was true in 2015 does not mean it's true in 2024. Whatever even an accurate belief from 2015 could be mistaken today.
Yeah, for sure. All right, let's go on to the third one. So the third one is our escrow security bond. Chad, if you want to give an overview of this.
Oh, I'd love to. I can talk for an hour, but I'll talk for 60 seconds, I promise. So everybody has to carry E&O insurance. They don't have to carry cyber, but that's probably the next prevalent insurance in this space. And fewer, maybe half of the title and attorney agents carry fidelity bond. There's, in our country, employee theft is still one of the top crimes in the country. There's you all might know the fraud triangle, where you have motive or pressure. You've got an employee who might be living outside their means, or gambling or drug or alcohol problem. We had a situation where the owner's daughter's husband had a gambling problem, and he got into some debt with the wrong people, and she had to steal money from her dad, the owner of the agency, to cover her husband's debts. Now, in this day and age, a 13-year-old can bet all they want through professional means, so we don't have to worry about that situation that happened 5 years ago. So that's the pressure or the motive. The rationalization, an employee, I should have gotten a raise. I bring a lot of business to this company. This company has money, so I'm just borrowing money. I'll pay it back. So that's the rationalization. And then the third spoke is opportunity. We insure a lot of small and medium-sized businesses in this space, and they don't have the controls that some of the larger businesses have. So in this space, they have a lot of exposure to employee dishonesty, and for $200 a month, you can have the third pillar of what these products do, which is they're going to keep your doors open for the long term. If you have a good agent and good policies, cyber, fidelity bond, E&O insurance, they're going to protect your business, and they're going to keep your doors open for as long as you want to keep your doors open. So I love this product, and it's underpurchased in our space.
I was going to say, I feel like we didn't even really maybe talk about this one the last time we did an insurance overview. Maybe we did, but I don't remember it. But I feel like this is something that in speaking with you, Chad, that you've actually seen more of, or claims where people have tried to come to you and recognize that this sort of event happened and then they weren't covered. Or is this something that you're seeing more commonly occurring? Why is this prevalent or important today?
100%. This small to medium-sized businesses, rightly so, trust their employees, but that is an exposure. They trust them to no end, and you just have to be careful. We had, so our applications used to require a 2-week vacation, and we know now that that doesn't happen anymore. But at the very least, we like to see 2 1-week vacations, because this fraud, this dishonesty usually comes out when an employee who is perpetrating it has to go on vacation. And if you have an employee who never takes vacation, I'm not saying they're stealing, but it's just a good practice. That's one simple practice that, during your slow time, require your employee to take a vacation, because like I said, a lot of our losses appear while that employee is taking a vacation because they can't cover up their tracks.
That's really interesting. I think that this one's interesting to me as well from where we sit in the certified world, because we see how much work is being done across cyber platforms to manipulate individuals. So even if they were somebody who was super honest, they could be getting pressure from someone that they've never met, who's formed a relationship with them online to convince them into doing these sorts of acts. And we see that a lot with money muling and other types of fraud that we uncover at Certified. So this is really interesting.
Let me add to what he said about rationalization, because that to me is the most wicked piece of that. Pressure, we all have pressure. We all have financial pressure, relationship pressure, those type things that get us talking to ourselves. And that's where the rationalization comes in. And I had one gentleman that made off with over $250,000 out of his trust account, and told me with a straight face that he did it because he was a good dad. His daughter was in drug rehab and he had to pay for it, and he had to be a good dad. And we talk ourselves into doing stuff nobody else could talk ourselves into doing. And if you don't believe me, I'll prove it with one word. That word is dessert. If we could not talk ourselves into doing something that wasn't good for us, dessert would not be on the menu. And how many of you have sat at the dinner table and said, I had a long week, I deserve that second glass of wine. I worked out this morning, I can have this piece of pie. Whatever it is, we've all done it, okay? And take that and ratchet up a little bit more with things of more consequence. And we're all capable, we're all human. We're all capable of our own weaknesses, and given enough pressure, you may focus for a while, but pressure big enough, long enough, we'll all break.
All right, so we've got all three types of insurance that we've talked about. We've talked about E&O, we've talked about cyber, now we've talked about the escrow security bond. So what we want to pose is really what would happen in the case of a wire fraud. John alluded to it a little bit, but that's really why we're here today and why Certified wanted to host this webinar, is because we see these cases the most, right? This is what we have come into the industry to try to help protect you against. And some of you out there utilize our services and others may not. And we've tried to carve out a niche to protect against wire fraud. But let's say that you're just relying upon those three policies. That's what we want to go through, is how can we ensure that you understand what you're covered for and what you might want to ask your carriers at renewal. So we've put together a list of considerations for your policy renewals that we're going to walk through today. So here are some questions to ask your insurance agent. And I'm going to let Chad sort of kick it off to guide us through some of these.
Yep, really quickly. This space, carriers, unsuspecting carriers will see that, they have these small to medium-sized businesses, homogeneous in nature. They have to buy E&O insurance, geographically diverse, which isn't as important for E&O insurance. So they jump in and they think it's going to be great, but they soon learn that this space is characterized by severity and frequency, and they start denying claims. They decide to get out of this market. And that getting out of the market, non-renewing an agent, is very disruptive. You've got the principal or the person that handles the insurance at the agency has to find a new carrier through their agent. They have to look over the coverages, and it's just so disruptive all the way up the line. So ask your agent, work with a carrier that's been in this space for a long time, not somebody that has been in it for less than 5 years. And then as far as it's really important. I mean, if there are some title underwriters that endorse carriers, so ask your agent if this carrier is endorsed by your title underwriter. What better situation can you have that this carrier is endorsed by your title underwriter? There are
what does that mean specifically? If I can interrupt you there. So when we say that like they're endorsed by them, what is that flavor? Just that the underwriter is suggesting that these are the preferred carriers, or how far do those endorsements go?
John, you can answer this after I just say, I think, if you go to the carrier, you go to the underwriter's website, they'll have preferred vendors on that website. I mean, if it's on that website, these vendors have been vetted and they have a relationship with the title underwriter. They know if they know they have to do the right thing in that title underwriter's eyes. And there are people at the title underwriter that go through the policy wording, and the claims people at the title underwriter have a good relationship with the carrier's claims people. So I think all of those things come into play. And if the underwriter is comfortable, they either put them as a preferred vendor or they actually endorse them at seminars and conventions and things of that nature. So yeah, ask your agent if the underwriter, or ask your representative, I guess. That's probably your title underwriter representative is probably a better person to ask in that regard. Is this carrier a good carrier? Does your company endorse this carrier?
And to add to what he said, when we add somebody to our partners list, we have a piece on our website called VIP, is Value in Partnerships, and when we add them there, we're staking our reputation with their reputation. And I'm an attorney by trade, and I did certain aspects of the work, but if somebody needed a divorce or a murder trial, that wasn't my gig. So I had to refer them to somebody. And if they went there and said, this man or this woman is an idiot, how could he send me here? They look more poorly on me. Okay. And your reputation takes a lifetime to build and a second to destroy. We don't take those things lightly when we extend it's not just professional courtesy. It is a belief in the partner when we say, you should be using this product, this service, this service provider.
I gotta imagine too, if you're a smaller agent out there, relying upon somebody that's been endorsed by an underwriter gives you the benefit of, if something goes wrong or a question comes up, you can go to them and say, hey, help me out. Like, I'm not getting communication, or what you guys said to be true doesn't seem to be playing out. And that could really help an agent that maybe doesn't have as many resources or a bigger team or more clout in the space.
Well, I agree with that. And, case in point, this seminar today or webinar today, long about 8-9 years ago, Tom, your co-founder, and I were talking, and we talked about improving the insurance posture about y'all's platform, because y'all had guarantee, y'all didn't have direct insurance at the time.
Yep.
Introduced them to Chad and Jackson, and I wouldn't have done that if I hadn't had faith in them at the beginning. And we have a relationship with them. Also, we have a partnership with certifID that's announced on our website as well. I mean, this is a living example of that very thing.
Sure.
One other thing too is that I'm sorry, if you're a small practitioner in a rural county or something like that, you don't have the contacts, connections, the awareness. The guy or a woman that you see at church or at the Y that sells insurance, and that's probably where it starts and maybe ends. Whereas this is a more specialized field and would rely on those that have already done that vetting and have those relationships.
John, 100% leads right into my next bullet, where that person, that your church friend, is tremendous for placing your auto liability, your GL. But when it comes to these three products, they're so important and they're so intricate, as John was describing before. You have got to work with an expert. You've got to find those agencies that do this all the time, because your business is reliant on having the right coverage. And Mike Tyson said, everybody's got a great plan until you get punched in the face. And it's so true. When you get that $600,000 claim, you've got to have good insurance. And And the local mom and pops are great insurance agents, but for this coverage, you need to work with those insurance agents that do this all the time. And that's really the gist of these questions to ask. There's a few more here, but they deal more with wire fraud, and I think we're going to hit that in the next slide.
And let me add one thing to that. And you come today to hear the gospel, to hear the truth. And I'm going to ask you one question, because a lot of these folks that maybe listen to this are trying to determine if, we've already gone on to how to and where to and from who to get the insurance. But if you're still in the ballpark of if I should have this coverage, I want to ask you one question. That is, what is your number? Okay. We all have a number, and that number is what we can't come back from. Okay. I don't know what my number is. I don't know what your number is, and I hope that neither one of us find out. But there is a number where we talked about pressure before, where there's no pressure because it's totally unobtainable. If somebody gets a $10 million judgment against me, so what? It's not, the pressure comes in numbers that are more doable. But we all have a number we can't come back from, and you need to critically evaluate that in your determination of how much tolerance for that risk you have, and how much, and we can never have enough insurance, but we hopefully can have enough that we can continue.
So Chad, we'll stay on these questions for a little bit on here. The one about with respect to title agents, asking specifically of a carrier, how many businesses do you place these policies with? Like, what do you think is reasonable? Where should they go to consider that these people really understand it? And then sort of a secondary question, because it came in on the Q&A, is someone mentioned, a security or an escrow security bond seems pretty specialized as far as an insurance policy. Where do people even go to purchase this coverage? So are those people that are specializing in this industry? Is it different types of carriers? If you could just sort of cover that.
Yeah, I think that you need to have an agent that places at least 25 businesses in this area. We work with 3 agents that place hundreds of agents. The Riebling Insurance Agency, Dan and Pete Riebling out of Long Island, Stewart Insurance and Risk Management, Tom Carpentier and Will Elizondo out of Houston, and then Jackson Nafsinger out of Amicus in Cleveland, Ohio. There's just a handful. There's some others that I can't, that I'm on the spot now and I can't name, but there's some other agents that are really, really good at doing this, but there's just a handful. So look for those agents, ask your underwriter, ask your rep, give John a call. He'll have some people, give me a call. And the escrow security bond is tailored to title agents. There are some tricks in a normal fidelity bond that would allow a carrier to deny a claim. For instance, if an employee is stealing settlement funds, well, that's an indirect loss. That's if the lender would go after the title agent, that would be a direct loss that would be covered, but it doesn't work that way. The title underwriter pays the lender, the title underwriter goes after the agent, and it's more of a liability situation, and that's not covered. So I don't mean to get in the weeds here, but you've got to be careful. The escrow security bond is tailored for this industry, and you've got to go online and look for the agents that can offer it. The 3 agents that I mentioned do offer that product.
Excellent. Very helpful. Okay, so let's talk about wire fraud on this slide. So when you ask that question, do I have coverage for wire fraud to your carrier? Talk us through that a little bit. Like, how do they really make sure that there is coverage, or how does that question get answered with nuance that our listeners need to be prepared to understand?
John, let me answer this question. Let me go first, because I spent hours last night practicing on how to answer this question. I made my wife and my son, who's home from college, listen to my eloquent answer, and here it is. There is no coverage for wire fraud from the insurance industry. There's no coverage. You have to, so that was my answer that I practiced. You can't buy it. We paid out We've paid out millions of dollars from 2016 to 2020, as have all the other carriers in this space, and it's not insurable anymore. You might have that agent who you're friends with at church. They might think, we have some very sexy endorsements called electronic funds transfer rider, social engineering rider, computer crime rider, computer manipulation rider. There's so many that sound like they cover wire fraud. Trust me, we insure more title agents, attorney agents, mortgage bankers than anybody. There's no coverage for this from the insurance perspective. You might think you do, but you don't. There's so many tricks and so many things that you need to do to get coverage that if you did those things, you wouldn't have had that loss. Do not rely on the insurance industry to cover it, because they just don't. I would love to say they do, but they don't. You've got to partner with a technology company. And I've got more on that, but John, what do you see?
Well, I would say that, part of what we were talking about, understanding your policy and your relationship, is for all those prerequisites and carve outs and things that Chad's speaking to. When it comes to something, a technology partner like certified, you wind up with, for example, the incoming wire coverage is coverage that buyer or borrower with his earnest money or his cash to close can't get anywhere else. I mean, that's the only place they couldn't go out in the market and even speak to an insurance agent about that. And the outgoing wire information or wire coverage for certified is also there because, at the end of the day, you're paying for insurance, and the cost of certified can be passed along more easily than the cost of an underlying policy directly on the settlement statement, et cetera. When you pay for insurance, I'm like anybody else. I want to get what I'm paying for. I want to be covered and not find out later that I was somehow didn't read the policy closely enough, or didn't understand the policy, or accepted somebody's word on what the policy said. All those types of things. So, I would strongly encourage you to have both pieces of this puzzle to have a complete picture.
As far as certified, so Tyler, we were introduced to certified from one of our partners because we wanted to give our partners, our production sources, and our insureds a solution, because we weren't able to pay the claims anymore. And we spent hours on the phone with you and Tom, and a lot of face-to-face, a lot of video calls, the London trip. And we determined that certified is the best in class. And so that's who we've partnered with. And that's what you need to do to prevent wire fraud. You really do. So go ahead, Tyler. Sorry, I didn't mean to cut you off.
No. Appreciate that. And I mean, I think even when we started the business, it wasn't an insured product, right? We approached it simply from a technology perspective because we believed that there was an opportunity to create a piece of technology that could fill this void. Fortunate, obviously, to be able to also now insure it because we can trust the technology to prevent this type of incident from occurring. And it's just, it's wild how fast the industry has evolved from a fraud perspective. And while we've been working on technology, policies have been changing. And that's why I think conversations like these are so powerful for those owners and business leaders who are trying to figure out how to navigate it all and to make sure that they are covered if disaster were to strike, and they've got a better sense of what they need to do. So I appreciate, all of those perspectives, and I think the audience will as well. If we get into this next one, so do I have protection against owner-seller fraud? Chad, how do you think about that one?
Same as wire fraud. There's no coverage right now for owner-seller fraud. And that's what's nice about having a technology company and or certified. I mean, it's really important to identify and verify the buyer and the seller, and that's how you prevent it. There's just no insurance coverage for that type of situation. If you ask your local agent, first of all, they won't know what it is. But if you ask the experts, some of the people that I named, they'll know what it is, and they'll say, there's just no coverage for it. The only way to protect yourself is to partner with the technology company and verify who that seller and buyer is specifically. You've got to do that.
And what about the last one? So does my policy exclude unintentional breach of title underwriting contract?
This is just one of the things that John was mentioning. It's an exclusion. These E&O policies cover all risk, so they have a lot of exclusions. This is a tricky exclusion used by a lot of carriers. It looks innocuous, but is a missed lien a breach of the title underwriter's contract? If it's a small claim, probably not. If it's a huge claim, they can pull this exclusion out and say, yeah, you breached our underwriting contract. You've missed this lien. So you just have to look at the wording. We do have this exclusion, but it requires a willful and an intentional breach of an underwriting contract, which is a really high bar to prove. And so we've never used it in this space. So yeah, those are some of the things that you should ask your agent. And if they have like a blank stare, you should realize that maybe I should seek an expert.
Let me add a corollary there. When Chad was talking about these exclusions, and also the really lack of a product for wire fraud. Whenever Chad said there is no coverage for that, it's a bit of a misnomer because what you should be hearing there is, I am the coverage for that. When I went to law school, nobody told me that I was going to be the insurance company for all my own mistakes. That's why we bought insurance, was to cover. Hopefully I didn't make any, but we're human. So, that's why you buy insurance, is to cover those mistakes. But where you don't have coverage, you are the insurance company, and you're not regulated. You're not bonded. You don't have any of the assets of a publicly held company to back you up either. So that's need to take these other decisions seriously.
No, that's a great call out, John. All right, we will continue here. So what are the key steps to take before your next renewal?
I'm so glad. I wasn't sure when this slide was going to come up, but this is really important. So the E&O policy is an all-risk policy. It covers a lot of things. It has a lot of exclusions, and if you have big claims, you have to make sure those exclusions are not bad exclusions, for lack of a better word. But one of the carriers can deny claims for late reporting of a claim. That's the biggest reason in this space that a carrier denies claims. And so if it's 2021 and you receive a monetary demand from somebody, from a third party, you have to report that in 2021. You can't wait until your policy renews in 2022 and report it. You've got to report it in 2021. If you have a situation which might give rise to a claim, for instance, the perfect example is a title policy claim. Now, that's a title policy claim. You give it over to your title underwriter, and so it happens in 2021. In 2023, your title underwriter says, hey, you know what? This was your fault. And what an E&O carrier is going to do is they're going to look at that in 2021 and said, well, you should have known that should have caused a claim, and you should have reported it in 2021. And again, the difference is a circumstance that could give rise to a claim, you have to report in that policy period, or an actual claim, a monetary demand, you have to report that in that policy period. And you probably are wondering, like, well, that's a tricky thing. Why do carriers do that? And it's for this reason. That E&O policy might have cost you $2,000 in 2021, and it's going to renew at 2000, and it's going to renew for 2000 in 2022. But if you would have properly reported that claim in 2021, we would have been able to underwrite it and charge for it. So your premium might have gone up to $3,000 or $4,000. And if you spread that out across all insureds, that adds up to a lot. And so that's why the carriers really want you to report those claims in the policy period when they happen. If you report them after, it's going to be excluded. Report them in that policy period when they occur. That's the most important thing, really. And then just another thing, if you hire an abstractor, if you get an abstract or a search, get it from your title underwriter. And I'm sorry, the abstractors out there that just do abstracting, I apologize, but it's going to be on the title agent if that third-party abstractor committed an error. I mean, your underwriter is going to come to you and your E&O carrier and make you pay, and your E&O insurance is going to go up. Now, after we pay, we can go after the abstractor, but that's like getting water from a rock. I mean, even if they have E&O insurance, and John, I'd like your comment on this, even if they have E&O insurance, we go to the abstractor and their E&O carrier, and we say, listen, we just paid this $100,000. Give us the money. You committed the error. And their E&O carrier says, well, sue us. And we have to hire law firms, and there's still a lot of variables that could occur. So it doesn't happen. Your E&O carrier is going to pay, and it's going to cost you on your E&O insurance. If you can spend, I don't know if there's a big price difference, but it's so worth it to have your title underwriter do the searches. John, do you find trouble with third-party abstractors and that?
Well, I mean, in the states that require attorney certification, they're doing it anyway. So there are a lot of variations there. I do want to speak to one thing that kind of adds a little color to what he was saying, and that is the terms. They're not on the slide, but claims made policy and prior acts date. Okay, if I'm looking at a renewal, first of all, a claims made policy, it's not like your automobile policy where you switch it the first of the year and you had an accident last year and you're making a claim on that prior policy, not on the new one you have, because the accident happened and was reported during that period. And with most E&O, it's claims made, which means that you got to have continuous coverage, and it's got to be made while you still have the policy in effect. Okay, so that if I'm comparing the new insurance company that wants to take my business to the old one, I'm going to ask them what my prior acts date is, because if it is this year, it means that for things that happened previously, I'm out in the wind by myself. Whereas to Chad's point about reporting that stuff, they can underwrite it, give you a prior acts date going back as far as they're comfortable with their underwriting. Maybe to the first day that you started business. When I retired from the practice law and came to the title side of things, my prior acts day was the day I passed the bar. And I had that policy in effect and was able to never had to, but it was able to have the peace of mind to know that was the case. I see policies come in all the time where they reduce their premium significantly because their prior acts date was Tuesday, which means they have no coverage for last Monday. And that's not generally explained to the insured very clearly. All they see is my premium was in half, right? But they don't have the continuous coverage for that extended period going back. And that's quite a surprise when you figure that out.
Yep. Another reason to have an expert selling you that insurance for sure. Yeah, very good point. And then just lastly, a lot of people confuse a fidelity bond with a surety bond. A surety bond is a low limit, $25,000, $35,000 financial guarantee. A fidelity bond is usually in denominations of 500,000 or $1 million, and just make sure you have a fidelity and you're not confusing it with a surety bond.
Great call out. All right, things to look for. So Chad, if you wouldn't mind taking one more pass on these to really hammer it home.
So I'm going to jump to the second bullet. One of our major competitors has this wording. They give you a $25,000 sublimit for negligent failure to prevent dishonest conduct. So they give you $25,000 of coverage and they advertise it as a positive, but For instance, we have a situation where, now I know this is going to be shocking, but not all notaries are highly trained. And we had a situation where a notary, a husband and an alleged wife came in at a closing for religious purposes. She had a face cover, and the notary asked her to take it off, but she said she couldn't. And so they went ahead and notarized it. And it was, she was not the wife, although she had the husband took the wife's ID. We paid a $300,000 claim on that, and our competitor would have paid $25,000 because of their insured's failure to prevent a dishonest conduct or act. So you have to be really careful. And then we mentioned the breach of contract. Again, you have to be careful about that situation. And, John mentioned the retro date, which is really important. But again, this is all sort of funneling to the point of these are really important policies for you. Take them serious, get an expert when you place them. And because there are these languages, I won't take you into the weeds too much, but there's languages in these policies that you have to be careful about. And so you got to get with a legit carrier who's vested in this area, and really good agents as well. So, yeah.
Excellent. John, were you going to say something?
He said it all.
Great. All right. Well, I know we have a couple questions, but before that, we wanted to look at what are our key next steps in 2024. So if you were advising, our audience in terms of how to approach the new year from an insurance perspective, what would it be?
John, you want to take? I've been talking first.
I'll start. I mean, you reach a certain age, and the doctor says you need to have a physical every year, right? And that is age one in the title professional business. You need to have an insurance physical every year. Evaluate those things because the new exclusions come along, new requirements come along, new sublimits come along. All those types of things that. It's not the same thing with your car insurance where they just raised the premium and you got the same coverage you had last year. The policies are developing over time, and a good agent will know those changes and be able to alert you to them, and then have alternatives for you as well.
Yep. I agree with all that, John, for sure. And just partner with the technology company that is going to help you verify the participants of a transaction. We recommend certified, but there are so many schemes out there, and they're evolving. This space is characterized by small to medium-sized businesses with a lot of money flowing through their escrow accounts. So if either do nothing, either only do business writing checks and receiving checks, or you have to partner with a technology company, because beyond the wire fraud, there's things, this is, history repeats itself. We're seeing the cashier check trick where sometimes the buyers and sellers are in cahoots, but the buyer writes a cashier check. And those things take a long time. Your local bank can clear it and put the money in your escrow account. But by the time it gets to that bank in Canada, that obscure bank in Canada or Alaska, and they say this is fraudulent, you've already, and the buyer says, oh, the inspection didn't turn out. So can you send us the $220,000? And you write that check, and then you find out that it was false. You've got to be careful about those situations, because that wouldn't be covered under your fidelity bond or any of your coverage. So it's really important to identify the identities of the buyer, seller, and everybody in the transaction. And so I think that would be the most important thing going into 2024 for this space, for sure.
So we have a couple questions. I think oh, go ahead, Jen.
So we do give discounts for use of certified, and we justify it. So we sell the fidelity bond, the cyber liability, and the E&O insurance, and we don't cover wire fraud, just like all of our competitors, but we get claims all the time. And because of state rules, we have to investigate these claims. we have to have a third-party law firm respond to them, and we spend a lot of money dealing with these wire fraud claims. So we do give our agents a discount if they use certified, because they'll eliminate this cost for us. So I meant to mention that, Tyler. So anyway, go ahead.
No, appreciate that. And, it's obviously been a lot of work with you all to figure out how we can best service this industry and try to help protect people. And we can try to beat them over the head and encourage them to utilize technology. But I really appreciate what you all have done to also incentivize, discounts on the insurance side to reinforce the fact that you're not covered by those policies, and therefore you should use technology, and we'll even incentivize you to use that technology. So I do appreciate the partnership and sort of the strategy that we've come up with to try to help really protect this industry at large. Because you said something at the beginning that I think is really important, which is, any one agent can kind of make an error or a mistake or decide to go out there and not have the coverage needed. But the industry at large is starting to get a lot more attention due to the amount of these incidents that are occurring. And I think from our perspective, our leadership team talks about it regularly. What will happen to the industry at large? What additional regulations might come? What other changes are going to happen if we don't start to get ahead of this and we start to work together to really fortify the industry from this risk? And so I appreciate both of you and everything that you've done to try to help educate the audience today, but also to work together to, really improve each and every one of these individual businesses, which hopefully will add up to a sum of parts that really does make a difference over time. One of the questions that came in kind of in line with some of that. So Karen asked earlier, she said, I listened to a webinar recently with someone giving some proposed updates from the FTC about regulations for cyber policies, like needing to have updated computer systems, requiring for a CIO for your firm to keep updated on your fraud protection, and limiting the amount of files you can save on your cloud. She asked, has anyone else heard of this, or are these things coming? And she said, just looking at more and more expenses for title agents to keep themselves safe. I'd be curious if either of you have any comments to that question.
John.
I would just say that as long as they're government agencies, there's more stuff coming. I've heard some of the same rumors there. And, quite frankly, if you look back to things like Alta's best practices that came out in 2012, 13, that had all these Article 3 had all these additional requirements for compliance regarding security, information security, and that type thing. If the industry hadn't gotten out ahead of it then, 5 years later, we would have been, slammed. Well, we're getting slammed now, but we wouldn't have seen anything if the industry hadn't embraced that ahead of time. And what we heard at that time was, it's too expensive. The small agent can't do it, those type things. And believe me, I ran a small business. Expenses come and they never leave. Income rises and falls, but expenses just come and reside. So I get it. But some of these things you're doing a cost benefit analysis of the cost of amortized over time of having things like encrypted email. $5 a month per account. If you're compromised due to lack of encryption, it's going to be hard to explain to any customer, any client, that I couldn't afford $60 a year to make sure my communication with you was secure, and that doesn't sell well. So I would say that there's more coming. Hopefully, it will be on a creeping basis because when we get hit, we can adapt slowly, but getting hit with a lot of new stuff makes it harder to swallow.
And then, Chad, there was a little bit of a follow-up to that question that I just asked, and I think it was posed more to the audience in terms of what they're doing. But I'm just curious from your perspective, as policies start to demand more of the businesses in terms of things that they need to report or do, how do you suggest that the insureds, handle that? And this question was more specific to they're asking it to do stuff that like their title production software doesn't even do. But have you run into that, or as you think about it from a policy perspective, Are you advising, agents to do specific things to make sure they are compliant with these specific policies?
So we haven't, there's certain things that we like them to have, dual authentication. We work in the cyber area, we rely on the syndicates in London to really drive their requirements. And, we're an expert at nothing, but we know a lot. I don't know what the saying is, but, we're not experts at the computer and cyber area. We wait for the syndicates to start requiring us to do these things on the cyber side. And so we haven't seen that yet, but surely they've got their nose to the grindstone or their finger on the pulse. When it happens, your insurance carrier is a good place to know what needs to be done, because yes, the long answer is yes. We will make sure that those are done before we sell you a cyber liability policy. We haven't seen that yet, but we will make those requirements of you to renew your cyber if they are required.
Yeah, that makes sense. All right. Well, this has been a fantastic conversation. And, before we close out, I just want to remind some folks of what we covered today. So one, leverage the main types of coverage. So we had E&O, cyber, and fidelity or escrow security bonds. Two, I think the loud and clear message from Chad was that those policies do not cover wire fraud. So insurance providers are recommending that you use technology, whether it's certified or others in the industry. Please make sure that you are protecting yourself, your business, and your consumers from this. And hopefully, whatever carrier you're utilizing would be willing to provide the types of additional discounts to enable you to utilize them like Chad has done via his. So finally, get your insurance agent for their professional help. Like, make sure that you're leveraging these questions that we provided to ensure you're covered. And if you use agents that Chad mentioned, such as Reblings or Stewart, you could save on your next renewal. So hopefully today was informative. You left with something that you're going to be able to utilize to jumpstart 2024 and protect your business. But thanks again, Chad and John. Really appreciate your time today and your expertise. It's always a pleasure to get to learn something new from the two of you.
Yeah, our pleasure. Thank you for having us, Tyler.
Glad to be here.
All right. Have a great day, everybody.
Take care, everybody. Bye-bye.